Hello and welcome. You're watching the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Dsouza.
Good morning. I'm Agam, Vakil, and here are the top headlines of this hour. It's a muted start to the week as Indian equity indices see a rather muted trade. India VIX declines. And open interest increases in Shree Cement and Tata Power as traders take fresh positions in their respective futures. And Biocon gains as much as 6% after its Bengaluru facility gets an all clear from the US pharma watchdog. Ultratech Cement and Ambuja Cement are top nifty losers on the back of rising costs brought by a ban on the use of pet coke in the national capital region.
All right, let's take a look as to what's happening in the futures and options market today. Clearly, it's been a muted start to the week after the gap-up opening which one saw on Friday's session after Moody's upgraded India. But today, if you look at the action, clearly there's no incremental buying which one was expecting after that upgrade came about. In fact, the Nifty futures on Friday saw a bit of short covering, and today also there's not much of an addition, just trading around that level of 10,300. The premium has been maintained around those levels of 22 to about 25. The Bank Nifty futures, now this is the one which has been on a bullish trend. Remember, there were fresh longs seen in the Bank Nifty futures on Friday's session, and 26,000 is the mark which one is watching out on the upside. But today there is some bit of selling which has come about, and it is on account of the weakness seen in the Nifty PSU banking space. You've got a couple of stocks, the PSU banking stocks which are trading weak. The Nifty PSU banking index has seen cuts of nearly 1%, and that's your biggest loser of today in terms of sectors. Well, what's happening on the options side? The Nifty is trading below its 20-day moving average that stands at around 10,306, and one has seen a lot of open interest addition coming for strike like 10,200. Now that's the strike where some sort of base has been seen. Let's see if the expiry can happen above that mark comfortably. As of now, Nifty trades there. On the call side, the 10,300 so far has added maximum open interest addition. Almost 3.5 lakh shares have been added. So the range which one can expect at least till the expiry, which is next week, is between 10,200 to about 10,500. In terms of what the institutions have been doing on Friday, we did see net long positions being built up by the FIs on the index futures. But remember, if you look at the overall positioning, that's still 50% long and 50% short, whereas on the option side, they've bought more of puts and written more of calls. Agam.
Well, in terms of stock futures too, there are quite a few from the pharmaceutical space which are buzzing in trade. But I want to start talking about Shree Cement, the obvious beneficiary, or rather the loser when it comes to the newest developments that we had with respect to the ban on pet coke in the NCR. And that's the reason why we're not only are we looking at a decline of as much as 5% in the stock, but we're also looking at a surge of open interest by as much as 23%. Ajanta Pharma, of course, as I was talking about earlier, has seen also a 12% increase in open interest towards fresh longs. Tata Power, as well as Just Dial, along with Voltas, looking at some amount of accumulation. In terms of unwinding, we're looking at weakness in HDIL, or down by as much as 5% when it comes to open interest. DLF, Syndicate Bank, and Indocount, along with Dalmia Bharat, looking at some more amount of unwinding for now. But on the whole, for now at least, we are looking at Shree Cement as the top loser in terms of the change in open interest.
And I want to highlight the India Volatility Index. It's 2 days in a row that it has a gap down opening and then it recovers. Even if you look at today, India VIX touched lows of 11.2 and it's back above the 13 mark, currently trading around those levels of 13.5. Remember, on Friday, after having a gap down opening, it closed in the green with gains of almost 2%. All right, before we get our guest on the show, here's a reminder. If you have any queries regarding the futures and options market, you can call us now on 022 4540 4141. You can also write to us on Twitter, Facebook with AskEQ hashtag. Let's welcome our F&O experts for the day then. Hemant Thukral of Aditya Birla Money and Navneet Daga of IIFL joins us on the show. Good morning to both of you, gentlemen, and appreciate you joining us today on BloombergQuint. Hemant, let me come to you first. You've had a bullish stance when it comes to Bank Nifty. Are you maintaining that?
See, what we are seeing today, I think, is more of a consolidation. We know Nifty saw that run up, remember, from 10,120 to 10,320. So you are seeing some sort of consolidation, profit taking coming in. But I have a feeling that now for this next 2 to 3 sessions, we may see this consolidation between 10,230, 10,250 and 10,400 on the upside. So we have to continue to trade within this range. Yes, Bank Nifty is looking more bullish. I think more important is that private banks have started seeing some buying coming in, and PSU banks are seeing some profit taking coming in. So Bank Nifty, again, the way the options are being written, I don't see it slipping below 25,500, 25,550 in a hurry. On the upside, 26,000 will be the new resistance point. So any dip towards 25,650, 600 will get you a risk reward in your favor. So, but it is more of consolidation that I'm expecting even going forward in next 2 to 3 trading sessions.
Good morning, Navneet. Are you also expecting some amount of consolidation when it comes to the benchmark indices?
Well, hi, good morning. The likely chances of consolidation is quite higher because looking at the option structures as well, on the lower side, 10,200 puts are now almost near at a peak level of open interest in the series, and it's looking likely that that level would be likely to be defended in the on the lower side. But however, we are expecting that the market would be in the range of 10,200 to 10,400 levels. So it's better off not to take a long short trade, at least on the Nifty. But benchmark on the Bank Nifty, it's looking likely that there's a chances of more outperformance coming in from here on as well. So we are also playing for a longer bullish bias on the Bank Nifty from current levels as well.
Well, 10,200 put has added over 5 lakh shares as of now. It's, remember, just 1 hour into the trade, and that's seeing a lot of writing coming in today's session. Let's shift our focus and talk about the options corner. Well, we've got Navneet Daga, who has a covered call strategy on Bank Nifty. But before that, let's see what it exactly means. A covered call is a strategy employed when an investor holds a near-term neutral view on a security. This involves selling a call option of the asset in which the investor has bought securities. Navneet, over to you. Take us through your strategy.
Well, as we discussed that we have got a bullish bias on Bank Nifty, and overall view on the markets remains to be on the sideways. So it's better to initiate a covered call whereby the risk rewards are quite favorable if you sell a call options or the near-term options. What I'm suggesting is basically go longer than Bank Nifty futures in the level of 25,750 to 760 range, and simultaneously sell at 26,000 call options for 23rd November, that is weekly expiry for this month. You get a premium of around 60 points on that, and we expect the Bank Nifty to bounce back towards the level of 25,900 to 600, 26,000 levels on the higher side. Simultaneously, to protect on the downside, keep a strict stop loss on the Bank Nifty futures levels of 25,600 on the downside. That's where the trade will negate the kind of a bullish bias that we are having on the Bank Nifty futures.
All right, and Hemant, you continue to maintain your stance when it comes to your calls on the Nifty Bank, or for that matter, your Nifty. Can you take us through that?
See, the idea here is that I still expect that in next 2 to 3 sessions we will try to revisit 10,400. If we don't breach below 10,230, 250, and in such an environment where slightly volatile markets we are facing, I would love to participate through options only. That's why I'm recommending to buy 10,300 call at a range between 90 to 91, and I think it's slipped a little bit, so even 88, 90 will do, keeping a strict stop loss of 65, which will coincide if we do breach below 10,250 in futures. On the higher side, 153, 154 is the target, which will coincide if we touch 10,400 on the futures. So idea is that if we are not slipping below 10,250, then in futures we are testing 10,400 in next 2 to 3 trading sessions.
Okay, those were a couple of option strategies from our experts. But moving on, Eris Life Sciences has entered into a definitive agreement to acquire Stride Sashan's branded generic business in India for 500 crore rupees. To give us more details and contours of this deal, Shashank Sinha, Managing Director of the company, joins us on the show, and also Darshan Mehta from our research team, who has been tracking this counter pretty closely, is here with us. Darshan, over to you.
Good morning, Shashank. The deal is finally done. You've sold your business for 500 crores. The first question is, what's the rationale for selling this business?
Good morning, Darshan. Our focus has been on building a B2C portfolio, and we have been investing over a long period of time in building capabilities for the regulated markets. As you know, we have scaled up our presence in Australia. We are now a top 2 player in Australia. and we have been growing our U.S. business based on the kind of investments that we have made there. We indicated in our last earnings call that we will exit this fiscal year, at a run rate of roughly about 180 to 200 million in the U.S., which is roughly double the rate where we were last year. So clearly, it was a reprioritization of our portfolio. We believe going forward, U.S., Australia, and Africa are going to be the big growth drivers for our business. And clearly, the India business, which is a good business, but where it didn't allow us to focus on all four, and therefore, since it was suboptimal to our portfolio, we believe that it will achieve its full potential under an India-focused company, and that's the rationale for the deal.
Okay, Shashank, was Eris the only one, or were there other players also in bidding in to buy your business?
I'm not at liberty to discuss all suitors for the business. Clearly, we followed a process, and we had conversations. Clearly, there were other people that we had conversations with.
Okay, so 500 crores is what the business will get you post all the tax requirement and other forms of payment. What is the net that will come into the company?
Net proceeds will be 400 crores, which will be used to repay debt.
Okay, what is the debt situation currently, and how much will it be post this entire deal, post paying this 400 crores?
Currently, the debt is about 2,400 crores.
Okay.
There are two elements to how you should look at it from a future perspective. One is, of course, what we are going to pay down immediately. So that's 400 crores. And the other is what will get pushed out with the demerger of the commodity API business in terms of the Solara demerger, which is only awaiting NCLT approval now and should happen in due course. With that, we should be down to about 1,600 crores of debt.
Anything else that pretty much would be non-core for you that you would be looking to divest from the company?
No, so this is clearly now the three growth drivers, as I said. There is nothing else that is non-core. We have been, as you know, in the past year, busy trying to focus our portfolio around our strategy. And so we have taken several corporate actions, whether it was spin-off of the generics business in Africa, or it was the demerger of the commodity API business, and now the sale of the India generics business. With that, we believe we have now a focused portfolio that we want to concentrate on.
Okay, my final question is, no doubt the interest cost will also come down. How much will that come down? And because your India business was built on a lot of acquisitions, there was a lot of amortization costs that happened. What will be the impact there?
Net impact of this transaction is an improvement in our EBITDA to PAT conversion, clearly on account of both these benefits. I would say net, our EPS will sustainably go up by about 6 rupees.
Okay. Many thanks, Shashank, and all the best for the way going ahead.
Thank you.
Well, thanks for that, Darshan. Of course, when it comes to the stock itself, the stock has moved up by as much as nearly 3.5%, as you can see there. But when it comes to the underlying futures, not really too much change. So, and for that matter, Eris Life Sciences is also doing very well. That's also gaining as much as 3.7%. Of course, of the two, Strides is the one which is in the futures and options space. And as I was suggesting, we're looking at very little change in open interest. But there is one stock which is doing well, not very well, but it has seen a surge in open interest, and that's also in the top of our list. That's Shree Cements. So if we can pull up Shree Cement right now and see what it's doing, it's down by as much as 4.6%, owing to the development in the NCR region petcoke ban, and its open interest has now moved up by as much as 24%. If I may move over to one of our experts, Hemant, if I may come to you on Shree Cements, it's currently looking at a lot of weakness. Would you initiate fresh shorts even at these levels? What are the underlying technicals telling you right now?
See, first of all, we all know that this is slightly a illiquid counter, Shree Cement, as it comes to be. But for me, important is that it's breached below 17,600, which was a crucial support level according to me. So yes, I think it remains a short, and you can even initiate a fresh short. I think the stock is now ready to move to 16,800 to 750. because the stock is volatile, please keep a strict stop loss of 17,600 itself.
Okay, that's the view on Shree Cement. The counter currently trades almost at day's low. I'm just going to switch focus to the pharma counters. In fact, if you look at the top three gainers in terms of F&O securities, Agam, all three are pharma stocks from the likes of Biocon, Strides, Sashin, and even Ajanta Pharma is doing pretty well in today's trade. Navneet, out of these three pharma counters, do you like anything where you would recommend taking a fresh long position?
Well, out of these three, we were tracking Ajanta Pharma, which has seen a kind of consolidation build up, and then after that a breakout on the higher side. So that seems to be that that counter might see some more strength going forward. So one can still initiate along with the higher side target of somewhere near to 1370 odd levels, and on the downside one need to move in the stop loss at the levels of 1270. So to my understanding, that can gain still strength from the here on current levels as well.
Okay, another unlikely mover that we are tracking today's day of trade is Tata Power. Now, the stocks advanced by as much as 2.6%, and we are also looking at a near 12% increase in open interest. There you have it. Tata Power currently trading, it's November futures, currently trading at 91.8. And while there is very little premium there, it has advanced. Hemant, any view here as far as Tata Power is concerned? I'm not sure if it's a very liquid counter either, but if someone were to make a position here, what would it be?
See, first of all, again, liquidity is an issue, but the position has to be on the long side. Because if you see Tata Power in particular, I don't think, in fact, I don't remember when I have seen last time crossing it 88, 89 band. It's a big achievement for this stock, because the way it's shaping up, it's looking good to go up to 98, 99. But because it has given a breakout above 89, so I will just keep a stop loss of 3 rupees. I think the stock should head towards 98, 99 in near future. So if you can buy on dips, because some profit taking is coming in the markets also. So you may get it around 90, 50, 90, 80. That will make the risk reward in our favor. But position has to be made on the long side, because stock has given a fresh breakout.
Okay, that's the view coming in on Tata Power. The counter on Friday in the second half of the session saw that huge surge coming about, and clearly the buying momentum continues in today's trade. All right, it's time for us to address a couple of viewer queries, and our first caller for the day is Shobha Kumar. She's calling us from Bihar. Hi Shobha, tell us what's your query on.
Hi, thank you for taking my query. I would like to know, is it advisable to take position in Just Dial till expiry?
Is it advisable to take position in Just Dial, a counter which was very active on Friday, and once again it is seeing fresh long build-up coming about on the future side? Navneet, at these levels, would you suggest Shobha to take any sort of position, considering there is expiry next week?
Well, this counter continues to surprise on the upside, and in fact, if you look at today's session as well, there's been a lot of action on the futures side. So I'll just suggest that this could be a quite volatile stock, but if you can trade with a very strict stop losses, one can still look to initiate a long on this trade. And to my understanding, there's a chances that it might surprise you as high as somewhere due to 600 odd levels. And one need to, if you are entering at these levels, one need to strictly keep a strict stop loss at the levels of 545 on the lower side.
Okay, so let's address a live query then. First live query comes from Pratipal Singh on Twitter, and he wants to get an idea on the Tata Motors 440 call. Can we take a look at what Tata Motors is doing currently? If I'm not mistaken, there you have it. It is 423. Very little change in open interest, but when it comes to that specific call, well, I suppose I'll go across to Hemant and ask him whether or not Pratipal can go ahead and initiate a buy call on that particular specific strike price.
See, I think Tata Motors is forming a very good base, if you ask me, because the way I see 400 put writers adding positions, I feel Tata Motors should not in fact go below that 410, 412 mark. On the upside, it has to cross 430 for me to give any big rally. Right now, it's in a complete sideways mode, but at least I can see it testing 430 once. If it stays above this levels of 410, 415 band. So what I will ask him is that if he wants to initiate, he can buy a 440 call. but just keep a very tight stop loss of 415 on the spot levels and expect it to touch till 430. At that junction he can book or he can put a trailing stop loss, because if it moves beyond 430 then only a big rally can come in. Otherwise I feel it's in a range between 415 to 430 currently.
Okay, that's the view coming in on Tata Motors 440 call strike. It's time for us to get you some trading strategies from our experts. Navneet, what are you betting on today?
Well, there is one long counter as well as one short counter. Firstly, to talk about the short one, the stock like of United Phosphorus Limited. I was witnessing this chart. It's been a terrible chart, and it's correcting since almost 840 odd zone after the results, and it's seen a continuous breakdown on the lower side. What I've observed is almost a 30% increase in the open interest in the current series from the start date to till date. The stock can still be looked to go short on at the current levels as well. 725 to 730 is a good range to enter into the short trade for November futures. I'll place a stop loss at 742 on the higher side and play for the target on the lower side of 695. The other stock is on the continuous. It's continues giving a momentum on the high side is likes of Tata Global. It continues to surprise on the high side, and once what we are seeing is basically the momentum continues to add up on the high side as well as the chart breakout on the high side. So I'll play for a target of 285 on Tata Global and place a stop loss of 250 on the lower side if you are entering at the current market price of 260 to 62 range.
So those are the views from Navneet. Hemant, what are you recommending today for our viewers?
See, I have selected two stocks basically. One, I would go with a very large cap stock, Maruti. I think stock has given a fresh all-time highs today, and it's happened on the back of the way the put writers have started marching on 83, 8200. So base is shifting up. I don't see a Maruti now slipping below 8350. So I have a feeling that we may see this rally momentum continue with a target price of 8600. So I would buy Maruti and keeping a stop loss of 8350. Second stock I have chosen is Ujjivan Financial Services, another stock which has seen a lot of accumulation of open interest. And if you see this stock, it's already moved up, and now at higher levels it's consolidating with that addition in open interest. So I feel one more move on the upside is still left, which can take this stock to 405, and one has to participate on the long side, keeping a stop loss of 387.
Okay, those are a couple of calls from our experts, but let's just pull up the futures of Canfin Homes. Remember, this was a counter which rallied almost 6% in Friday's session, but there is a bit of weakness which has come in for this counter today. Not much of an action actually seen on the futures side, with still trade with a premium of almost ₹1.5. Navneet, if somebody would have taken a long call on this on Friday, considering the stock was rallying, what should they do since the stock has seen a bit of weakness in today's trade? Should they hold on to their long positions?
Well, to my understanding, one can wait for the day end and look for a trend to give it a confirmation whether it was a kind of a dead cat bounce or not. But I'll wait for a trend almost to 230 odd time frame, whereby if the stocks started to not able to sustain on the high side, it's not it would not be prudent enough to carry the trade on the long side in this counter.
Okay, well, that's the view on Canfin Homes from Navneet. And of course, Navneet has also offered his views on a lot of these pharma counters which are buzzing in trade. But Hemant, if I may come to you on one specific one, and that is Ajanta Pharma, which is advanced by as much as 4% today. And we're looking at accumulation and open interest. What would you do with this stock right now?
See, regarding pharma, I would like to pinpoint one line. I think pharma mid-cap stocks are looking much stronger than the large caps. I still don't feel any conviction in buying a Lupin, a Sun Pharma or a Dr. Reddy. Ajanta Pharma is a different case altogether. One, we have seen open interest accumulation, as you have mentioned, Agam, and I feel the stock is now trading well above the 1280 mark, which I was looking. It was acting as a big resistance for the stock. So it's a sort of a fresh breakout also, and I see the target towards 1385, 1390, and one has to keep a stop loss of 1280 on the same. So again, just to repeat for viewers, I don't see any reason to buy Sun Pharma, Dr. Reddy and Lupins of the world, but Ajanta Pharma is looking strong, Torrent Pharma is looking strong, and so is Biocon. So mid-cap pharma will be doing much better than the large-cap pharma.
Okay, so the mid-cap pharma, according to Hemant, looks better than the large-cap pharma companies. And remember, most of the moves that you're seeing on these pharma companies today is on back of some amount of news which has come in the case of Strides, where they've sold their domestic business to Eris, and also some EIR being received by Biocon, and that's the reason why you saw that gap-up move coming about. All right, with that, it's a wrap on this edition of the F&O Show. I would like to thank both our guests, Hemant as well as Navneet. Thanks a lot for joining us today and giving us your views on the derivatives market, and also helping our viewers with their queries.
Lots more lined up, so stay tuned in the BloombergQuint, and we'll keep getting you more action from the markets.